of course, one of our favourite topics here in cash flow is, and will remain for the moment anyway, property. But instead of focusing on some of the more inflated markets that we normally talk about, today we're actually looking at something a little bit different. We're looking across the Tasman to New Zealand. Now, the property market has been stalling in recent months despite seeing signs of a recovery late last year. Our guest, though, is ready to call a bottom. William Nobrega is advisor at Val Group, joining us live from Hong Kong. William, great to have you with us today. Look, it certainly isn't a market, I should say, that we talk about a lot here on cash flow. Certainly is an interesting one, though. And we've seen some interesting moves in the property market. We started to see a bit of a recovery. We've seen a pullback once again. But I do notice from your research that you believe right now we are sitting at the bottom of the market.
Yeah, that's correct. I mean, as you pointed out, I don't think you go month to month. What we're looking at is a long-term play for New Zealand. Obviously, as you pointed out earlier, you know, they took a big hit in 2008, 2009. Things came down 20-30%. But the fundamentals are there. So we're very bullish long-term over the next 4 to 6 years. And as you pointed out, it's a niche market that really not a lot of people actually have exposure to.
Yeah, it absolutely is. And now you're starting a pure fund there. It's been structured for primarily Asian investors. You know, I'm guessing that you also want to try and capitalize on the China story that we've been talking about.
Absolutely. I mean, you know, long-term, look, we like China as a market, but clearly there's a bubble forming, specifically in Tier 1 cities and primarily, in our opinion, residential. So the question is, look, if you're a property investor, want to benefit from China's growth, but want to mitigate your exposure to the Chinese property market, what other property markets do you look at? And that would be New Zealand, Australia, and several others in the region that are benefiting from China's growth, but don't have that kind of volatility that the Chinese market has.
Where are the opportunities then in New Zealand, William? Are you looking at the residential side of things? Because we know that the latest Real Estate Institute of New Zealand sales are showing that the number of residential property sales last month was, in fact, the lowest for a July month in a decade. So clearly that's down near the bottom, you would hope, anyway. And then is there something different that you're looking at in terms of the commercial, the industrial applications?
Yes, actually the residential side is the smallest part of the allocation. Rental rates actually jumped about 5% last month for residential. But to your point, you know, there's still some supply there. What we're really attracted to is commercial, mixed-use, industrial. Again, there's, you know, still some oversupply in certain areas, but longer term, we expect rents to go up, to be a shortage of supply, and therefore is the opportunity for the fund. And again, this is a fund that's looking at a 6-year to 8-year horizon. So we're not looking to, you know, for some amazing spike, and we wouldn't want that. What we want is a nice steady increase year over year, as opposed to the volatility we see in other markets.
What sort of returns are you looking for, William, in this fund, and what sort of appetite have you had from investors?
We're looking at an IRR of 20% or more per annum. A dividend yield of about 8% per year, you know, paid out on a quarterly basis from rents and other profits that are derived from the fund. I will tell you that the appetite's been really, quite frankly, very impressive. The fund's been extremely well received. As you pointed out, it is a niche fund. It's the only dedicated New Zealand pure fund. And for, you know, high net worth individuals and institutions in the region, it gives them access to the New Zealand market. So yeah, we're going to be quite busy over the coming weeks, and you know, quite frankly, that's gratifying.
I bet it is, William. Look, let me ask you just very briefly before I let you go. When you look at the New Zealand market, it certainly it does compare in certain ways to the Australian market. Is there the thought, or have you got plans to start looking into the Australian market in more detail?
Yeah, absolutely. Look, we like Australia. We are launching a larger institutional fund in November. That will be a New Zealand-Australia fund. It'll be approximately 600 to 700 million U.S. We're not, you know, we haven't finalized the fund size yet. But what you find are, you know, some of the global institutions want exposure to both markets. They're both attractive for you know, the reasons pointed out earlier. And you know, exports from both countries are surging to China. We expect that to continue over the coming years.
Okay. All right, William, good to have you with us. Thank you so much for joining us today. Good luck with the fund launch there. William Nobrega from Val Group with us there.